Greetings, everybody. This is Jeff Scott. It is 4:47 on Sunday, the 24th. Futures are not out yet. This is my weekend review. I actually had a few minutes, so I decided I would do this. I am in a teeny-weeny business center at a lousy hotel, which was the best I could do based upon where my mother-in-law's funeral was. So if it's noisy or the acoustics are bad or I get interrupted, I apologize in advance. I just entitled today Holding On because I could have just repeated last week's, to be honest with you, from a look and feel of the market, but you'll see more as we go on. This is for education purposes only. Any recommendation in the spirit of education and investment advice of a doctor, not a broker. I am independent, which means I'm not affiliated with any software vendor or trading company. Every tool I demonstrate, I paid for. And no one pays me to say good things or bad things. Trading involves risks, and you alone are solely responsible for the trading decisions you make. Again, anything I recommend should be taken in the spirit of education alone. Also, from time to time, I do like to talk about options, but I would definitely keep in mind that options are a risk instrument, and although I think they can be used to actually reduce one's risk, I think it behooves me to remind folks that they should be considered for options only be used by people that know how to use them and recognize the inherent risks. When I do my education programs and the way I approach trading, I call be your own guru. You have to learn something, get good at it, modify it by learning more things, and what you do is probably going to be different than what I do, which is different than what somebody else does. It's becoming your own guru. I remember Ian Woodward said to me years ago, this is Ian up here in the upper left-hand corner, Jeffrey, I am not the guru, I teach you to be your own guru. I think that's the way you should approach your training. My background, based in canceling, improved my rallies and catcher, taken to HGSI with Ian Woodward and Ron Brown. John Person, just a great trader, mentor, friend, developer of indicators, software, author, taught me how to take the stocks I found in HGSI and how I wanted to trade them. Van Tharp, the god of money management. George Lee, my buddy from Canada, a great trader. I've had the pleasure often of spending time on the podium with him. And then for those that are looking for something a little simpler that's done for you, the education and the software tools that Guy Cohen has. Speaking of education, again, just to call out that I'll be doing a 3-day event assisting John Person, which means I'll probably have an hour each of those 3 days, Thursday, Friday, and Saturday, November 30th through December 2nd, followed by a 1-day event of my own. 2 separate events. You have to reach out to John's office. Here's the phone number. Hit pause if you're interested. Here's his website, and here's my email for more information. Specifically about my meeting on Sunday, December 3rd. I'm taking what I've done in the past in 2 or 3 days, and I'm going to try and cram it into one long, and I'm sure it'll be a hard-working day for me. And I think we can get through most of the important stuff together, so I'm looking forward to that. I'm going to demonstrate how I make a decent return without having to be at my computer all day, show you what I do each night, and frankly, I work full-time building a company. Topics, things I learned from Ian and others, finding my A trade, managing the trade, how I use options to increase return or protect return, setting up my scans in TradeStation and Thinkorswim so you can do what I do, and then putting it all together. It will be at the Palm Beach Gilliam Hilton, as is the location for John's meeting. Cost is $400 if you're attending John, $500 if not. Limit to 12 attendees. I've got quite a few already. Thank you for those that have paid. Breakfast and lunch will be included on Sunday. I will invite all attendees to something on Saturday night, whether it's my boat, whether it's going out to a nice dinner. I won't say fancy, that assumes you have to be dressed up. To be determined. I could tell you, ask anybody that's been to my other programs, I spend most of the money on these meals. And then every attendee, whether they show up or not, will get the MP4 videos of each presentation, as well as slides and PDFs. I do not sell a slide-only option. I do not web stream this, but I know some people from time to time won't be able to make it, and they still get all the slides. What I need on my desert isle, besides high-speed internet, I need TradeStation or Thinkorswim. Genesis is a great program, but I don't spend much time with it on these programs because I know most of you are not going to spend the money. HGSI is my analytics program. EdgeRater supplements that. I do believe in seasonality, but typically supplementing the other work. There's a number of great websites. Speaking of websites, this is the HGSI website. Again, I am not affiliated with the company. However, they have a free 30-day trial that doesn't even require a credit card. And if you're under investing strategies, you'll see a number of videos that Ron Brown, I, and others have done, both how the market is doing as well as how to use the software. The other thing to tell you is if you get involved with HGSI, if you email me at my hgsidoc@gmail.com, I will send you a number of videos that I did a couple of years ago, so they're getting dated, but the program's the same, of how I use the program. Stock patterns are cyclical. Every Sunday before I do this video, I ask myself, where are we? Because I have to know where we're sitting, because that's going to determine how I make the trades. For quite some time, I've been convinced that we just truncated off the top. We run up, and just as I think we're breaking out to new highs, we pull back. Just when I think we're rolling over, we go up again. And sort of in a Darvas box, well, we are slowly coming down, You almost say we're near highs and basing, except for the Russell, which actually broke out to a new high on Friday. My gut feeling is we go higher into year end. The question will be, do we drift further? Do we get a quick 3 or 4 correction before we get there? Since I'm still a little bit in uncertainty, I have raised cash, have smaller positions, and have sold premium, but I'm going in and out between stage 2 and stage 3. And I do think before this market's over, and I'll show some reasons why, that this market's going higher. I always like to look at the sector review from TradeStation at the end of day Friday, and I could see what was working and what was not working. I can see, I apologize, my mouse, I'm not in the best location. Let me see if I can change where I'm sitting a little bit. All right, you can see that home builders were mixed, materials mixed. Energy is it breaking out? It broke a long-term downtrend this week, so energy looks strong. I got a number of energy plays. I got COG. I talked last week about COP, and I've got some Halliburton working for me right now, and maybe I need some more. Financials, pretty much uniformly weak except for broker-dealers. Credit cards still strong. Industrials, technology, mixed to the strong side. As semiconductors also mixed, Micron has earnings this week. Staples and discretionary, weak. Retail, picking up. Utilities, extra weak. Biotech, mixed. Transports, mixed. And then REITs were weak and casinos were weak. I do this just to get a sense of where the money is moving. And the best part is, and I'll give this window to everybody that comes to my meeting, if you can't build it yourself, well, shame on you, but you can get an idea intraday which industry groups or sectors are moving. Major markets tell a story, and oh my goodness gracious. The keys here are, this is the E-minis, the NASDAQ, and the YM, so these are futures. This is the IWM because TF became too expensive. This is the VIX, and this is the dollar. This is a daily chart, and the first thing is the top 3 have clearly been in uptrends for some time. Notice that a buy signal still exists on the E-minis and the YMs. It's just a little bit of a flag, but we actually got a sell signal on the NASDAQ futures and closing right above the 50-day moving average on Friday. That's weak. Counter that with the big move to the Russell, and the fact that you see the white bubble here on the last day tells you the Russell has broken out to a new high, at least on this chart. You can see on the E-minis, the YMs, and especially the Russell's OBV is strong. It looks like it's pulled back some on the NASDAQ. The VIX popped up, could not get above the 200-day moving average, and is stuck between the 200 and the 50-day moving average. Clearly, much higher than it was a few days ago and where it's been. And the dollar continues in a funk, tried to rally on the Fed and really didn't get very far. Looking at the weeklies, you can see we're in a weekly buy signal on all the major indices. The 17's above the 50, above the 200, which is strong. The VIX closing down here in the lower part of the range, and then the dollar failed at the 200, and we'll see if it doesn't get weaker. And then lastly, perhaps easiest to see, this is my Genesis view, and I've got columns of the E-minis, the NASDAQs, the Russells, NYSE, and the Dow futures. And again, looking at the monthlies, you could see everything is lower left to upper right. Everything, the OBB and AD line are going up. The only chink here is on the daily, and on the weekly, the NASDAQ is certainly weakened, and you could see OBB has failed on the NASDAQ daily and weekly. So a little bit of weakness, just look at Amazon and you'll see it in the NASDAQ 100. Talk about some of the things that I saw this week. I saw rates, come on, Jeffrey. Rates stabilized. This was a descending trend line here, and it looks better on the daily, but on the weekly, we've closed above it on both the 10-year and 30-year bonds. So rising rates are good for banks, regionals, and insurers. Banks haven't seen the benefit yet, and falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders. I think all in all, it's starting to rise, but the reason why you didn't see a big influence down here is because we're still below these white lines in the sand where we need to get above to see an improvement. Now, this is interesting. This is small stocks on the left, big stocks on the right. The white line is the AD, the yellow line is the S&P, and that's how I typically have looked at this, and you could see that in both cases, the AD line continues to go up and the index is lagging. Now, in my book, that's very bullish, and the AD is a leading indicator, and perhaps that means the indexes are going back up. I would put that in the bull category. Looking at another way, the white here is the AD line on the NYSE, and then you could see that in green, the diamonds have pulled back, in yellow, the spiders, the Q have all pulled back. The thing pointing up is the small stocks. And again, I like to see AD lines leading the markets. Breadth remains strong on both the stocks above the 200 and above the 40, moving up ever so slightly from the prior week, but not into overbought. 3-month new high, new low, apparently peaked here last week and gave back some of that. Still in the upper part of the zone, but not at a clear-cut reversal time. And as I look at the McClellan, I was starting to get interested here as this last run up started getting higher and higher on the oscillator. I've also been interested in that it looks like the pattern of lower highs and higher lows that we were seeing here might have been broken here. That's good. My lovely daughter just brought me a beer. How can you beat that? Perfect. And on the weekly McClellan, the same thing. You can see that we're getting back to the zero line on the summation index, and we've turned back some from the oscillator peaks. Again, this is something that I look at. It has to do with breadth. And it also gives me a sense of how overbought or oversold the market is. But you're really looking for extremes, and there's no extreme here. Current buckets. This tells me that 73% of the stocks in the S&P 1500 are above the midline, and that that's bullish. And that if you look at where they fall within the deciles of the Bollinger Bands, midline here are the Bollinger Bands, you see most of the stocks are above the middle of the Bollinger Bands, which is what you'd expect to see, but very few stocks below and above. I look again for extremes. We're bullish, but not an extreme. I look for Hindenburg omens. These are a signal of when the stupid money, us, are buying and the smart money is selling it to us. Typically, a volatile market at market tops. If I went back, which I've done multiple times, and look at 2000, 2008, 7 and 8, 2000, 95, you'll see Hindenburg firing everywhere. There have been no recent Hindis in well over a month and a half on either, at least a month, the NYSE or the NASDAQ. This third column here is the Woody indicator. It gives me a sense of the overall health of the market. Red is bad, green is good, yellow is neutral. This is what chop looks like in here, although this is pretty weak. This is kind of choppy. We're choppy to bullish here. We're not perfectly bullish. There's a lot of yellow, but there is no red. And you can see from a sector perspective, we're weak. I believe it was financials and utilities, I believe, were the weak ones. Put together, as taught by Ian, a list of leaders with the hypothesis that the leaders will fall and turn down before the market is over. And you could see that in the June swoon, the leaders broke down but quickly recovered. And I think they bottomed around, sometime in the middle of June. I'd like to put the other leaders list June 27th, I think. We've pulled back to the 50. So I call that pull back to free parking, or is it something worse? That's a big indicator for me. The weekly bongo is still green. It looks like a pullback, not a breakdown. If it pulls much below the blue, which is the 50, it won't be time to stay in this market, or perhaps to be a little bit lighter. I also put together a E-index, which was a larger list of current leaders, put together June 27th, and I have the exact same story as we pull down to the 50, which has been a site of reversal in the past. Know your news and earnings. So Monday, we got a lot of Fed speak, some auctions. Tuesday, again, a lot more Fed speak, new home sales, consumer confidence, Richmond Fed, Janet speaks. Wednesday, we have mortgage application, durable goods, more Fed speak, more home sales, petroleum report. Thursday, we have jobless claims and more Fed speak. And then Friday, we have personal income and outlays, the Chicago PMI, consumer sentiment, and the Baker Hughes rig count. I would say that's a medium. It's certainly not a no news weekend, but the following weekend, which will have the monthly unemployment report, will be a bigger one. Earnings are slowing down. As I look through this, some of them that hit me, IHS Markit, they have a nice chart. Earnings are on Tuesday. Micron looks like their earnings are on Tuesday as well. Darden Restaurants, Worthington, which is steel, often gives a view of where steel is going. Progressive Insurance, the Progress Software, never mind. KB Homes. I stand by my comment on the bottom. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So market thoughts. Russell closed an all-time high as small stocks lead on the week. At least a recent high. I have to go back further, but I think it's an all-time high. iPhone 8 orders disappointed. The iWatch developed a bug. And then Apple's and supplier stocks caught the flu. Actually sat on a plane next to an Apple executive who felt that the iWatch 3 is a super product and that the bug was minimal. My guess is over the next couple of weeks, you'll start to see the story become, and I don't know about you, but it's certainly the same for me. Why would I buy, if I'm a person that's an early buyer, and every time there's a new version of an Apple product comes out, iPads, iPhones, et cetera, I buy them. Why would I buy the the iPhone 8 when I know in advance that the iPhone 10 is out next month? So once the analysts come out and say that this is actually good for the 10 and that's a higher margin product, these things will turn around. For now, they're falling. Fed comes and goes with confusion on rates, but clear plan to reduce QE slowly, starting soon. That is, if the economy continues to grow. Large stocks, healthcare rolled over some. Is this a pause to refresh before year-end rally? Dollar popped on Fed announcement, then stumbled into the weekend, and gold sold off on the Fed. A wall of bad news continues to grow with more hurricanes, earthquakes, and failed healthcare reform, which ultimately will drive questions about tax reform, which some people think are holding up the market, yet no evidence of any major deterioration. I really am impressed with the rising AD lines. Top-down review is the usual agenda. We'll go into TradeStation first, and then we'll spend most of the rest of the time in HGSI. And now on to the charts. Just want to go back here. So in TradeStation, I have put together sort of 5 or 6 point, depending on which chart I use, of the strength of the market. Let's go into the indexes. And let's look at the E-minis. So I'll go take some time on the E-minis and I'll go quick on the others. I start with the PPS buy and sell signals. This is a buy, buy, buy. So daily, weekly, monthly are in a buy. That's big. I look at the color bar. Green is go long or hold. Red is go short or hold. Blue is neutral. So it's neutral, green, and blue. So I'd still say that's positive. Third thing I look for, are we above the envelope, which tells we're going to go sideways and come in, which we did, or are we below where we're coming up? So here we've just come back into the envelope. So that's taken off a negative there. Fourth thing, I'm looking at those dots. Do I have any of my dots that say I've got divergence? When I see that, the market usually reverses. None right now. The fifth thing I look at is the high jump. When it gets above 90 or 95, I know we're going to see a reversal. It's at 40, neutral. And then lastly, I look at my bongo on the weekly, which is the middle of these three dots. And that's green here. So I think the E-mini still looks strong. Aside, if you come to my live meeting, I will give you the high jump. I will give you the bongo, sort of. You have to pay a third party if you want multiple time frames. If you want a single time frame, I can give that to you for free. John will probably have an offer on his package, perhaps, maybe. I'm not promising it. If I have 5 people reach out to me that want his package, I've been able to get some consideration in the past on a group deal. And the same thing with Elder. If we have enough people that want his, I can usually get his indicators. But I'll show you how to create it, how I use it. E-minis look bullish. And as I said, futures are not out yet. Let's look at the Dow futures. Up, blue, green, blue. Just getting back in the envelope. No surprise that these two indexes were kind of tough this week and kind of flat, as they really needed to refresh and come back within the envelope. No, obviously, divergences, 43 and green. Bullish, but recognizing we still may have a couple more days or weeks of sideways market to burn off some of the excesses. The NASDAQ, a little different. Daily sell, weekly and monthly buy, red, blue, green. So certainly weaker than the others. You saw these divergences here. Now I could say, see, it told me it was going down, but the reality is they've been going on for so long, you almost forget about them. 24 and our weekly bongo is green, which is the middle. So weaker, but still hopeful. Hasn't rolled over yet. A little short-term weakness. And then lastly, the Russell futures, which should look superstar. And you can see they're in a buy in all three. Blue, green, blue. For the first time, we're seeing the red dots, which tell me look out or be careful. But notice it went on 1, 2, 3, 4, 5, 6, 7 days before the market sold over before. So it's just a signal to be careful. We're at the top of the envelope, another potentially concerning sign. We are at 49% in green here. So still overall bullish on the Russell. So NASDAQ 100, clearly the weakest. If I take a look at the dollar, I see sideways movement. Here was the Fed day, and then here was the next day, Thursday, and then Friday, sort of a nothing day. Maybe that's a reversal and it goes higher. It is in a buy in green. Weekly and monthly are sell. So right now this is a counter trend rally. It's within the middle. There's no dots. 21%. And notice the dollars in a weekly bongo sell, which would be consistent with this being a retracement in a downtrend. Very quickly, the VIX. Really not doing much of anything here. This is the VIX the VIX flat. Sell signal in the VIX daily, weekly, and monthly. It did turn blue. The bond goes blue. So buying VXX, UVXY, probably not big money makers. My daughter's girlfriend, who's a money manager, boyfriend, excuse me, went very long SVXY this week, and he's a pretty smart guy. He's a quant. If I look at gold, what do I see? Gold peaked with the dollar, little run up, and gold has pulled back pretty sharply over the last week and a half. Weekly bond goes green, weekly went sell, monthly is a buy. So strength is in small stocks. The Dow and S&P are about the same. The NASDAQ the weakest, dollar has been in a weakness, and the VIX has been low. Now I'm going to open up HGSI, go into the designer, go down to Woodward and Brown Groups, full, look at Major Market Plus, hit the warehouse, and I'm going to pop up, go to top-down view. This is ranking the different instruments by just sales, price and volume. And it shows me the small and mid caps did the best. The big stocks, SP 100, NASDAQ 100, S&P 500 were the weakest with volatility. Utilities were weak on the week, and gold was in the middle. All right, well, that's interesting. Usually I see all the stocks leaning one way, not that separation. Start with the S&P 500. We've already looked at it, so very quickly. Okay, here we go. So these are my Bongo weekly, Bongo daily. These are my two Hindenburgs with different indexes being used. S&P clearly in an uptrend. Let me give you a little more. At the top of the trend channel, when you're at the top of the trend channel, one expects you to go down. That's about 30 points or so risk to the downside before it would hit the trend channel and drop up. You still have support here with the 17 and the 50 and the 8-day exponential. S&P is in an uptrend. I expect it to go higher. Not sure it goes higher right away. The Dow. Also, let's see, in the middle here. And the Dow, this is where I said before, is it going to go up? You can't see it very much, but there's actually a green arrow here, which is exactly what it followed. Or was it going to drop straight to the 200, or was it going to drop and bounce around? So I think we can see what the dollar did, which was it went straight up. It's now pulling down. Right now, that's a bullish flag in my mind, and not really. I'm not sure it counts as a flag yet, but if it pulls back more, I'll be looking for a breakout from the flag. In an uptrend, still bullish. If I look at the NASDAQ, things will look a little different. And you can see we're heading down towards that 50-day moving average. But until such point that we hit that, you're still in an uptrend, and we're still above the 50. And then the Russell 2000. Clear-cut uptrend, and let's take a look and see, is this something meaningful? There's a monthly going back to 05. Here's quarterly going back to 1990. And we are, folks, at an all-time closing high for the Russell 2000. Since everything, even the NASDAQ, are up closer to their all-time highs than not, since the AD line is going higher, and in a few weeks we'll be getting into the sweet spot of the year, why not be bullish? Well, we still got October to get through, which is typically a better month than September. We still got another week of September. And then now let's take a look at the dollar. Told you it's been weak, but it popped a little bit. And you could see a big up day on Wednesday with the Fed comment, and then it came right back down. And notice that this weekly bongo would have kept you out of the dollar for quite some time. The VIX ran up and came right back, and the VIX is down here. So the VIX is quite low, although as I said before, it's not quite as low as where it was back 6 weeks ago. Gold, you all know the story. Gold peaked, then it has come down. This was a box it was in, and guess what? Still in the box. And then lastly, silver. Looks a lot like gold on a compressed basis, which means that gold miners, which is kind of a hybrid between the two, should look similar, which it does. All right, so I'm looking at this. Small stocks are where you want to be, although that can change. The market itself looks a little beaten up, a little pause weak, but certainly Nothing negative. Again, I apologize for the noise. I'm in a relatively public place, but if I'm going to do this, I have no choice. I then drop down to 07, which is the industry groups. I have 172 of them, and now I'm going to rank them by two-day force. You can see I've got 68 to the upside, and I have only 7 to the downside. Biotech, generic pharma, power generation, casinos, and entertainment. Some of these have been pretty strong of late. Going back to the upside here, so I have 68 on the short term, 61 on the intermediate term, and if I look at the intermediate term down, I have 26. So on all my metrics, we have more bullish than we have bearish. So let's look at the two-day force, and let's just look at some of the groups and some of the top stocks. Ranked by raw, double click on services index. Now I'm going to drop down. That's not what I do. Pretend I didn't do that. I'm going to right click, change to index group. I don't know if HMNY is the right code. So I saw this and I thought this was something else, but regardless, something happened to this about 5 or 6 days ago as it's doubled in 6 days. Whenever I see that, I get nervous and don't pay attention. IT services, don't really know. You have to do your own evaluation. Cheap stock, volume is a lot. I just don't know this, and the stock price looks funny, and it's an interesting, different name. However, HP Engineering, this can't be what I want. Yeah, I guess it's because it's moved up from 13 to 14 and a half. Not really that exciting. Veritone, these are IT services, from 12 to 60 in 6 weeks. An IPO, I wish I would have seen this a while ago. Not enough volume for me, that's probably why I didn't pick it up. Cubic, a Bible gap up in a very strong group, great earnings per share growth. Again, the volume is kind of low. Accenture, lower left, upper right. This one's probably viable. Earnings per share growth not as exciting. And then DXC, another IPO. This one I thought was interesting as well. Ran up, basing, mobile breakout from a squeeze, pocket pivot, and Kahuna. That one looks like it might be ready to go. So some of these are new companies. The patterns are very similar. When I see 89% 5-day, 87%, I get nervous, and I would probably be doing some more diligence. I do like DXC Telecom. Veritone looked interesting. And I think there's another one. I just can't remember which one. I might have it on my list. Containers and packaging. That must tell me somebody thinks the economy is going to run. When I see that nobody is above the index, I'll just look at the top 3, see if I see anything I like. Sealed Air, SEE, kind of a beaten up stock with a bounce. Ball Corporation, broke above the 50 with a pocket pivot, the mobile breakout, the weekly bongo turned green, makes earnings, pays a small dividend. That looks interesting. Ball Corp, this graphic packaging, kind of loosey-goosey to me, so I would skip that one. Then I go to the third group down, steel raw materials. Interesting because these have been weak. Nothing's above the index. Let's take a quick look at Schnitzer Steel. Nice upgrade from a low of about 18 up to 27 in 3.5 months. A little bit of a flag here. Earnings are out in a month. Probably one of the better looking steel stocks. This is a coal stock, Suncoke Energy. All right. Exploration and production. You should own something here. We'll look at a couple. This is very typical where you've had a long downtrend now broken above the 50. Here's Anadarko Petroleum, 3 kahunas in the last 6 or 7 trading days to the positive. Doesn't make money, lots of shares traded, small dividend. Pioneer Natural Resources, little bit of a fry pan bottom, broke above the 50, new green weekly bongo, small dividend. ConocoPhillips, I talked about this a week ago, 1, 2, 3, 4, 5. When it was sitting under here, it broke out and above the 200. Great earnings per share growth, pays a 2.2% dividend. Hess, I think is a pretty much pure play oil, moving up. Devon Energy looks the same way. You clearly have a group that's on the march, and it's early. In fact, let me just go back in and let's look at Gulfport. I thought this chart looked okay too, and then I'll do something else. Again, long downtrend, and now it's starting to move up, has earnings per share growth. I just look at oil. A couple of comments. Yes, start with the weekly. Oil has been in a horrible downtrend. It's been going sideways for some time. The OPEC ministers met last week, did not agree to any extension of oil controls. However, they did pat themselves on the back because things are better. There is an improvement in utilization. I like to see oil break above the 200 before I get excited. I do sometimes nibble, and I've been nibbling. As long as oil stays above the 50, I'll be nibbling on some of those energy plays. I also like Parsley Energy. I always think of Brad Paisley when I see that. Again, broke above the 50, Kahuna's, New Bongo, great earnings per share growth. One thing I like about Parsley is despite all the changes in the market and the reduced price of oil, they've actually continued to grow their revenues, and that's pretty impressive. Next group down are banks. Now, this was the bank that stood out, and until rates rise, I'm suspect. This is, I think, an Argentinian bank. And this is a beautiful pattern. Kind of a shallow uptrend, big up move, consolidation, pullback, breakout again with multiple kahunas in the squeeze. I like Banco Macro SA, PE, half the growth rate. Then I get to the index, and we'll just look at the next couple. So there's anything here, SunTrust, sideways, KeyCorp, PNC looks interesting. The best one was the first one. Communications equipment. Cisco. I looked at this. I said, that looks interesting here. Why do I think it looks interesting? It looks like it wants to go higher. It's broke above moving averages. Had a high closed doji here. 2 pocket pivots. Kahuna. OBV is strong. Everything is green. Don't like the earnings per share growth. I do like the 3.5% dividend. Earnings are out November 15th. Arista has just been a racehorse, continues to go higher. It's expensive. F5, a beaten up stock, looks like an energy play breaking above the 50 with a kahuna. Mobile breakout from a squeeze. That might start to look interesting. All right, just finding a couple things. Specialty pharma. Ascend had some good clinical trial news. It's a red candle, but it's a really powerful, strong day. Gapped up, came back. That bothers me some because it gave up some. The news was very strong on one of its drug candidates. I don't like the historical average volume. I would probably pass, despite other things on the chart I like. Don't know Akari, AKTX, similar pattern, closed back from the gap up. La Jolla, clear-cut uptrend, looks like it's launching here. It had some good clinical trial news, does not make money. And then the one that I do follow and like is Corcept, CORT, and it's giving you another buy signal, pull back to the 17. I'd look for it to take out that PSAR dot and buy some more. I'm already in this position and have been for a couple of weeks. Specialty apparel, it's interesting. I've got 3 of these. I'll look at my 3 after a second. L Brands, this is why I'm paying attention, energy as well. Are they done going down? Let's just put this on a weekly. peaked here at 95 and end of 15. It's fallen more than 50%. It looks to me like it's done going down for now. I go to the daily chart and I see trying to break out. It's got to get above the 50, even with the Kahuna pocket pivot, everything is green. To watch, not buying. Finish line, similar story to watch. Gap I own, and Gap has broken out, and I bought it a little earlier, and it looks like it wants to go higher. It's going to have some growth coming in, 3.2% dividend. Children's Place had a sort of sideways, had a run up here, but hasn't done much. DSW, where I like to buy shoes, broke above the ascending 200-day moving average. The ones that I also own are ANF. Nice move up. We'll see if it goes again. And American Eagle Outfitters. Again, nice move up, now above the 200-day moving average. Automotive retailers. I guess with all these hurricanes, there'll be a lot of dead cars that need to be replaced. And you can see CarMax with a viable gap up on Friday. I right-click, more info from web, go down to FinViz, say, hey, what's going on with CarMax? Which I could say anyways, because I don't know what that answer is. It's not an industry group that I'm very well versed in. I like my cars, but I don't know anything about the business of cars. Broke out of a wedge nicely. Beat streets. 2-year high. Strong results as used car sales rise. That's a lot to like. So CarMax, let's just see a weekly chart, see if it's too high. It's getting close to prior highs. I might have to wait for it to take that out before I go fishing in it. But CarMax looks interesting. AutoZone, expensive stock on the parts side, moved up but deep in its pattern. O'Reilly, it's global, advance. I like the first one. All right. And then the 10th group, which is usually where I stop at, would be electrical power equipment. And look at this, GE. We'll go through the first three. I usually blow GE off. But it has a 3.9% dividend, has some earnings per share growth, much more than the multiple. Has to get above that 200 for me to get interesting. Notice the weekly Bondo went green. BWX Technologies, a beautiful chart, uptrend, breakout, sideways, breaking out again, pocket pivots, Kahuna's out of a squeeze. I like that picture. And then Watt, not that exciting. So I always do the top 10 groups. Within TradeStation, some things that I like to look at. And this is the power of TradeStation, what I'm going to show you now. I have a lot of scans that I run on a routine basis. And I incorporate a combination of HGSI and John Person screens. And what that does is it drives me to a list of high value stocks. So I might look at a buy one, which would be a new PPS buy in a stock. Let's see what it says. PPS one is a daily buy when the weekly is in a buy mode. So here's a AbbVie. It's one of my favorite stocks. Make sure this is updated. It is. And you can see weekly is in a buy mode, pullback, and a new buy mode on AbbVie on the daily. So I like this scan to find stocks that might be interesting. All right. Buy three are stocks in an uptrend, but it's near support, so it's pulled back some. So let's look at one of these. Let's look at YY. So YY, pull back here, and then had a new buy signal come in. So the point of a scanner is it allows me to find stocks that meet my criteria. Let's say I'm looking only for stocks that have a mobile breakout, add a squeeze, and they're close to a PSAR reversal. So I think this is my scan. Let's see. Take a look on these 5. So what I have down here are my dots. So this is a squeeze, mobile breakout, PSA reversal, and a green candle low, all occurred on 5. So I'm looking for a mobile breakout, which is this red dot, from a squeeze. And I also required in this scan, I believe that they have a PSAR reversal. Let's look at this real quickly. Mobile breakout from a squeeze with a PSAR reversal. So scans are a great way to supplement my top-down approach. Take a quick look at my buy list before I say goodbye. Again, this is going to be abbreviated because I'm sort of busy with family. And these were some of the stocks that made it to my interest list for this week. Now let's just put the scorecard because I want to do something. And I want to just look at the industry groups. Semiconductors have been strong. They gave us some weak. My favorite is probably UCTT, which I currently own. I got back in when it broke out here, but it's pulled back. It looks like it wants to go higher. I like UCTT. Brooks Automation, sort of a kind of a cup and a handle ready to break out. High close doji there with a mobile breakout. Great earnings per share growth. All right. Oil gas services. This is one I wish I would have bought when I first found it. RPC Inc. is probably too far gone, but certainly is a leader in this market. Great earnings per share growth, so maybe it's something I still might want to pay attention to. And then Pump is an IPO. Probably don't want to touch it down here. I just like this deep pattern here. So oil services. And then a lot of mortgage finance. I have to tell you, I don't know what the impact is of them selling their mortgage-backed securities. But my guess is as long as they're guaranteed securities, somebody's going to make money managing them and keeping them performing. When I see these stocks all performing the way they did, I think this is bullish on this group. Annaly Capital Management, Specialty Finance, Mortgage Finance, portfolio real estate related investment securities, including mortgage pass-through certificates, centralized mortgage obligation, agency callable debenture. Okay. You have to know the stocks and know what all this means, but I'm seeing a stock pattern run up, sideways, a kahuna came in, no earnings per share growth, but pays a 10% dividend. Capstead, not as pretty a pattern, certainly in the bottom. No earnings per share growth, but pays an 8.7% dividend. Chimera, a little bit of both. It's pulled back to support, looks like it wants to go higher, makes money, although not any growth, gives a 10% dividend yield. New Residential, again, pulled back, slow incline, pays 11.8%. Two Harbors Investment pays a 10.2%. So if you don't like getting 1 or 2% on your money, those look interesting. IT services, this was the #1 group. These are some of the ones that I picked, the 3 that I liked. Bazone is a Chinese IT stock. It's obviously been a great leader in 2017. It's got a flag, so the way I trade flags is simple. When it breaks to the upside from this, I go long. And that's what I'm going to look for. So maybe not yet, but get ready. Convergys Corp. When I see it so close to 200, I want to look at a weekly. So it's had a great run up until the end of 16, sold off pretty hard. Now it's running again, 2 weekly kahunas, down things, blue things down here. Lots of pocket pivots, pays a 1.6% dividend. And then I already showed you GCX Technology as an IPO. Exploration and production. I think we looked at most of those. We looked at, here's a Chilean bank that I thought looked good as well. Medium tightness, nice uptrend, a bunch of kahunas, makes money, 2.8% dividend. So what I do is I take this list, and then you can pick whatever program you like. I put in some orders. So what I might do on something like cons. I already have a position, I might want to add to it. So what I would do on cons is say, you know what? I think it's going to run again. Kind of a weak cup and a handle. This is the group strength. Couple of kahunas here got it running. Great earnings per share growth. So what I might do is look at some things I could do to give myself alerts. Remember, I don't stay at home all day. So I see that the high was 22.9. I might decide that if the stock traded above 23.05, so I might put a buy there, and I might put that at okay. And then where would I put my stop? Well, the lowest bar in the last 4 days looks like it's right here. And the low there is 21.65. The low here is 21.70. Take the tool off. 21.65. So I might put my stop right below the lowest bar of the last 4 days. So that would be something like 21.60. So I've got $1.45 risk, which is about 6.5%. I put in an order that says if I go above this. Now, I use a lot of different programs for alerts, but I could go into Thinkorswim, I believe. What chart am I looking at here? Con. I got a lot of things going on. Let's give this a second. Hope I didn't do. All right, perfect. I'm going to create an alert that says prices at or above 23.05. Con is in buy zone. And that way, I might be able to get myself an alert based upon Con's price. I typically do them in MTC 2000 version 17, which to me is a little bit easier. So I've now talked about the market. We still have some short-term risk, but you get the chance, the feeling that this thing's going to go higher longer term. I'm still careful, but I get less careful every week as I wait to see what happens. Be careful. If you're interested in coming to my live event, love to have you. And December 3rd, HGSI.doc@gmail.com for more information. And lastly, I just wanted to show a couple of the retired guy stock. I failed retirement. I was bored to tears. But here's KKR. Kind of a sideways motion, pays a 3.4% dividend. Blackstone looks like it's breaking out here, pays a 6.5% dividend. And even better, Carlyle Group, which has broken out,